So chapter 14, this is the introduction and overview, and this is the chapter that's on analyzing financial statements. It's kind of the chapter that the whole book has been working up to. So what do you need to know here? Well, I guess the first part of the chapter starts with Warren Buffett, who has made $62 billion with his solid investing practices, and they put this out as a kind of an example of what you can do if you can understand financial statements. The book used to start with a New York City cab driver. The guy was from Brazil. He had a Palm Pilot and his laptop in his cab, and between fares he would play the stock market. And so he would talk about this. He'd say, yeah, some days I make 70% return on my money. But then when you press him on the matter, you find, well, yeah, when it comes to the end of the year, I've made most of my money driving the cab. And so you want to be careful when you're listening to people about how great they do in the stock market, because a lot of times, like the cabbie, they'll tell you all the winnings, but they don't tell you so much about the losings. And so Buffett was a little unusual. He was able to make the profits consistently. The cabbie, a little more typical. So chapter 14 is going to give you sort of the basics of analyzing financial statements, and that's one small part in the process of analyzing investments. So when you finish this chapter, you're not going to be ready to go out and blow all your hard-earned savings and put it into the stock market, but it is a starting point on learning the basic principles and techniques. So before we get to the chapter, I like to really set the playing field for this chapter. You've got two main groups of people involved here. You've got the insiders, and this is the management of the company. These are the the managers, the CEO, all the people inside the company, the insiders, and they're hugely interested in how the financial statements come out. Most companies will have earnings targets. They want to hit certain earnings per share, certain return on investment, various other measures, financial measures. And if the managers don't hit these targets, well, there's an awful lot of incentive for them to use accounting techniques rather than operations to do so. This is not generally accepted accounting principles. It's called earnings management, and it is not okay. But it's done a lot. So as the insiders of the company, the management may be compensated based on whether these targets are hit. And so they have a lot of incentive to mess with the numbers. And so that's why the ability to analyze the statement comes in handy. So that brings us to the second group of people interested in financial statements, and that's the outsiders. This is creditors, investors, potential investors like you and me, government agencies. And what we're looking at when we look at financial statements is, how has this company done in the past? What's the current market position of this company? And what do we think they're going to do in the future? And in order to make informed decisions on this, or judgments on this, it's not going to be, you have to assume, or you have to determine whether the financial statements are reflecting the economic reality of the company, or if they're total works of fiction. So as outsiders, we're going to look at various trends, how the company's performed in the past in terms of sales, expenses, various returns, and we'll see how to do that. So we have to determine if the financial results shown on the statements are valid. Do they represent the actual economic reality or not? And that just takes us back to that first group, who have the strong incentives to manage earnings and other financial ratios to get the desired results. Earnings management does happen a lot. I've got a link on the external links section on Blackboard that takes you to the Securities and Exchange Commission website. And if you go to Enforcement Actions Accounting, you can see the list of companies who get in trouble for doing all kinds of un-GAAP things. Okay? All right, so going back to this game here, we've got the insider team and the outsider team. Who makes the rules? Well, Financial Accounting Standards Boards comes up with the generally accepted accounting principles. And then the referees would be the Securities and Exchange Commission, who tries to enforce these rules. and then the Public Company Accounting Oversight Board, which resulted from Sarbanes-Oxley legislation. So we've got kind of an overview of the playing field and the two teams. The other thing I like to get into a little bit at this point is sort of why all this, why do they try to enforce these rules? Why do they have these rules? And if you start thinking about yourself as an investor and wanting to part with your hard-earned money and put it into, stocks, if you can't count on the financial statements being true, then chances are you are not going to put your money into the stock and bond markets. And if you and a lot of other investors feel that way about financial statements, then if they don't have the confidence to invest in the market, then the companies have no source of funds to expand, to do research and development and all the other things that they need funds to do. So the goal of all these rules and enforcement is to really keep the financial system running as smoothly as possible. Okay, so now the setup of the chapter. Wait a minute. Okay, the setup of the chapter. Yeah, a couple of really important things here. The first 5 learning objectives are the tools of financial analysis. You've got your vertical, you got your horizontal, you got your ratio analysis. We'll cover those. You do not need to memorize any formulas. Okay, for exams, I give you the sheet of formulas. However, you still have to do the homework on this because it's not as easy as it sounds. You have to know how to work with these formulas to get the right results. So make sure that you do work through all the homework, and if you have questions on how to calculate any of the formulas, let me know. The other big item in this chapter is in the earnings power and irregular item section. Do not read pages 734 and 735. There are no more extraordinary items. I put a red flag for that, but no more extraordinary items. This is something that happened, I think it was in October. FASB, Financial Accounting Extraordinary items. Okay, no more extraordinary items. FASB changed this, I believe, in October. So your book still has extraordinary items. They are no longer allowed under generally accepted accounting principles. So do not read pages 734 and 735. And if you run into homework that has extraordinary items, they are now treated as other revenues and gains and other expenses and losses. So they are not reported net of tax. I will be redoing some of the homeworks because the Wiley answers are going to show it wrong with the extraordinary items. So for the solutions to your homework, just check the chapter 14 section on Blackboard. Okay, so that's kind of the intro and overview.